If student loan forgiveness is on the to-do list this year, this episode walks through public service loan forgiveness, what it is, who qualifies, how payments are counted, and how to fix the most common snags. The goal is simple: answer the exact questions people search for. What is PSLF? Which employers qualify? How many payments you need? Do $0 IDR payments count? What about lump sum payments? Whether consolidation resets your clock? How deferment and forbearance months show up? How to submit the PSLF form and e-sign it? How long processing takes? What to do if your count is wrong after a transfer? Whether PSLF is taxable, how part-time jobs combine to 30 hours, and what to expect during servicing or policy changes. First things first, what is PSLF and who qualifies? Public Service Loan Forgiveness is a federal program that cancels the remaining balance on direct loans after 120 qualifying payments while working full-time for a qualifying employer. Full-time generally means your employer's definition, or at least 30 hours per week, whichever is greater. The 120 payments don't have to be consecutive, but each must be made while employed full-time by an eligible organization and on an eligible plan. You must still be working for a qualifying employer at the time forgiveness is granted. Which employers qualify for PSLF? 3 broad buckets. Any U.S. government employer, federal, state, local, tribal, including the U.S. military, any 501c3 non-profit, and certain other non-profits that primarily provide qualifying public services like public health, public education, public interest law services, emergency management, or library services. Contractor roles paid by a private company usually don't count unless you were directly employed by the qualifying entity. If there's uncertainty, use the PSLF employer search to check your employer by name or EIN before accepting or switching jobs. If an employer isn't in the database, you can request a review by submitting its EIN. The tool can add it once eligibility is verified. How many payments for PSLF? The rule is 120 qualifying payments, at least 10 years. A qualifying payment is one made on a direct loan under an eligible plan, standard 10-year or an income-driven plan, for the full amount billed no later than 15 days after the due date, while working full-time for a qualifying employer. Good news if cash is tight. $0 payments under an income-driven plan still count as qualifying payments because the amount due is 0. Also helpful, lump sum prepayments can now count for multiple future months, up to your next IDR recertification date, or up to 12 months, whichever comes first, so one large payment can cover several months of qualifying credit. You don't finish earlier than 10 years, but you can avoid missed months if you prepay and then have a tight period later. Does consolidation reset PSLF payments? And should you consolidate? Consolidation turns multiple loans into a new direct consolidation loan. Historically, that restarted your payment count. Under current rules and adjustments, older credit may be restored or weighted in some cases, but timing and policy shifts matter. Consolidation can be essential if you have FFEL or Perkins loans that otherwise won't count for PSLF. It can also help Parent Plus borrowers when paired with the correct plan path. But optional consolidation at the wrong moment can temporarily reset visible counts and introduce delays while credits are reconciled. If you're close to forgiveness, weigh the risks carefully. If you need direct status for eligibility, consolidation may still be the right move. Rule of thumb, don't consolidate without confirming how it affects PSLF and IDR credits in your specific situation and whether a near-term adjustment or reconsideration will restore months. Do deferment or forbearance months count toward PSLF? Normally no, only billed months on eligible plans count. However, recent one-time adjustments credited some past forbearance and specific deferment periods toward IDR and, when overlapping with qualifying employment, toward PSLF counts. Those windows were time-limited, and buyback options are rolling out unevenly. Bottom line, don't assume pauses will count. Document employment during any eligible periods, submit certification for those months, and watch for agency updates about account adjustments or buyback processing. How do you submit the PSLF form, and can you e-sign with the PSLF Help Tool? Yes. The PSLF Help Tool lets you search your employer, e-prepare and e-sign the form, request employer certification electronically, or generate a PDF for manual signatures and upload. Best practice is to certify annually and any time you change employers, so your months are tracked as you go. What about processing times? Estimates hover around 90 business days, but real-world timelines range from roughly 2 to 6 months. Digital submissions are typically faster. Paper forms, missing info, or employer verification delays can stretch the timeline. Keep proof of submission. Check your PSLF tracker periodically and follow up if nothing moves after the expected window. Why is my PSLF count wrong after a transfer, and how do I fix it? Servicing, migrations, and system updates can cause missing months or paid-ahead flags. Start with the PSLF tracker in your federal account. Compare payment counts to your records, verify employer certifications for each period, and confirm loan types are direct. If consolidation or a transfer caused gaps, request a manual payment review. If the count still looks off after an update window, file a PSLF reconsideration request and attach supporting documents, pay stubs, W-2s, HR letters, and your own payment log. Keep making qualifying payments while it's under review. Pauses can delay your finish line. Is PSLF forgiveness taxable? Under current federal rules, PSLF cancellations are not taxed as federal income. States vary. Many conform to federal treatment, some set their own rules. So check your state's guidance for the tax year you expect forgiveness. Keep in mind that broader temporary federal tax exclusions under pandemic-era law have sunset dates. PSLF's tax-free status at the federal level stands separately from those broader exclusions. Do part-time jobs count if you combine hours? Yes, if you simultaneously work for 2 or more qualifying employers and your combined hours average at least 30 per week, that meets the full-time threshold. Document both employments and certify each one for overlapping dates. Part-time at a single employer below 30 hours doesn't qualify unless that employer defines full-time below 30, rare. So most borrowers rely on the 30-hour combined rule. What happens during servicing changes or policy updates? Expect temporary lags, invisible counts, form processing, or employer verification. Agencies generally push retroactive fixes once systems stabilize, and they publish windows when missing months will be restored. The practical playbook: keep copies of everything, submit forms digitally when possible, check your tracker monthly, and set reminders for IDR recertification to avoid losing eligibility months. If your expected credits don't show after the announced update window, file for reconsideration. Let's stitch this into a clear, step-by-step action plan that mirrors the top how-to searches. Verify employer eligibility. Use the PSLF employer search. Confirm by name and e-in. If not listed, request a review and keep HR contact info handy. Confirm loan types. Only direct loans qualify without consolidation. If you have FFEL or Perkins, evaluate consolidation timing and credit preservation. Choose a qualifying plan, standard 10-year or an IDR plan. If cash flow is tight, IDR can set bills low, even to $0, which still counts. Certify employment annually. Use the PSLF Help Tool to e-sign and route to your employer. Save the confirmation. Track payments. Review the PSLF tracker against your bank servicer statements. Fix paid-ahead or misapplied payments quickly. Use lump sum rules thoughtfully. One prepayment can cover future months up to recert or 12 months. Note the next due date and recert window. Avoid avoidable resets. Don't consolidate casually. Check effects on PSLF IDR credits, especially near forgiveness. Handle pauses carefully. Don't assume deferment forbearance will count. If an adjustment applies, certify employment for those months. When counts look wrong, request a manual audit, then file PSLF reconsideration with documentation if needed. Escalate to Ombudsman after failed resolution. Mind the taxes. PSLF is federally tax-free. Confirm state treatment the year you expect discharge. Now, a few quick FAQs in the exact language viewer's search. How many payments for PSLF? 120 qualifying payments, at least 10 years while full-time for a qualifying employer. Do $0 IDR payments count for PSLF? Yes, if $0 is your billed IDR amount and other conditions are met, it counts. Do lump sum payments count for multiple months? Yes, up to your next IDR recert date or 12 months, whichever comes first. Does consolidation reset PSLF? It can. Credits may be restored or weighted in some cases, but don't consolidate without understanding the impact. Does forbearance count toward PSLF? Generally no, except for limited adjustment windows. Certify employment and watch for official updates. How to submit the PSLF form. Use the PSLF Help Tool to e-sign and route to your employer or upload a signed PDF. PSLF processing time, roughly 2 to 6 months in practice. Digital is faster than paper. PSLF count wrong after transfer? Check the tracker, request a manual review, then submit a reconsideration with evidence. Is PSLF forgiveness taxable? Not taxable at the federal level. Check your state rules. Do part-time roles count if combined to 30 hours? Yes. Combined hours at qualifying employers can satisfy full-time. Finally, here's a 1-hour checklist to move from "I'll get to it" to "It's in progress." 10 minutes, run the employer search and save a screenshot. 10 minutes, verify loan types and note which, if any, require consolidation. 10 minutes, pick or confirm your repayment plan and next recert date. 15 minutes, submit your PSLF form via the Help Tool and notify HR. 15 minutes, download your payment history and start a simple log. Put 2 reminders on the calendar, 1 month out to check your tracker and 30 days before your IDR recert to avoid gaps. The rules can be technical, the path doesn't have to be. If you align employer, loans, plan and paperwork and keep records, you will turn those searches about PSLF and IDR into a plan that actually gets you to month 120.